Hello, everybody. Welcome to a Sunday stream, Sunday, July 28th. We're going to be previewing what's going to happen in the stock market next week. I'm actually thinking of turning this into potentially a weekly thing. I definitely wanted to go live today because there's a lot to talk about. The next week we are going to see in the markets is going to be one of the most monumental weeks I say we would have all year. We've got a lot of tech earnings that I want to talk about, a lot of FinTech earnings, a lot of energy earnings, a variety of different companies. They're going to be reporting semiconductors. They're going to be live next week as well. And then on top of that, you have the Fed FOMC meeting. Will we get a cut, raise, or pause? Most likely it's just going to be a pause, not a cut or a raise. But I want to talk about those implications. And then on top of that, we also have this kind of small cap rotation thing that just started to take off last week on really Thursday and Friday after the NASDAQ fell by 3.5%, really saw some weakness in tech and the S&P, rebounded on Thursday and Friday, but then we saw the market rotate a little bit. Is that rotation real? Is it fake? Are we actually going to see Tom Lee's thesis kind of play out? Is the market going to go there, or is there going to be too much momentum to the downside? So I think there's a lot to talk about. And I also think, honestly, 8 p.m. on Sundays, this could be like a little weekly 30-minute thing as well. Some weeks we probably don't have a ton going on over the next week, but I think just like amalgamating all the major themes of the upcoming week and then just running through them over 30 minutes, I think maybe that could be useful. So hopefully that'll be fun. And maybe we do this every single Sunday and keep going. Thank you, everybody, for being here. We got Ray, Brendan, ET. What's up? MK said, please no, not another weekend stream. I'm supposed to have a life. MK, thank you for being here. I'm Beneficial, Midwest, Bay Ray, Jeff Money, Kite, Super, Midwest, Austin, BJ, Tesla. Thank you all for being here. Chamu, what's up? What's up? Now, also, we will have Finance Junkies. It's not actually back. I know Carlos said it's back, but he'll do more explaining when we go live. So that'll be at 9 p.m. So once I'm done with this, I'll be live there. I put the link in the chat. Finance Junkies is not literally back. It's like kind of back. So he'll explain more about what's happening. And we'll talk more about that at 9 p.m. So if anyone wants to tune into that, I'll be live on that channel after this one as well. Gene, what's up? We got Ontario in the house. I love it. Peter, what's up? David, Josh, Franklin, George, why didn't you go to the Ambani wedding? I wasn't a successful enough Indian to get invited. That's how I know I'll make it in life. The next time the Ambanis host a wedding and I get invited, that's how I know things are looking up and I've made it. All right, so we got a lot to talk about. Look at this. Lena's like, what are you doing here, Amit? It's Sunday. Stop annoying me. Nope, I'm back and we got a lot to talk about. So I think let's start off with earnings, right? Because we got earnings next week, so I think we'll start off with earnings. Here's the picture I want to share on what we have on earnings. It was also the thumbnail as well. This is what we got next week, folks. This is a lot, and this was another reason I wanted to go live because I think there's so much that's happening. We kind of just got to condense it down and get deeper into what it is. And also, I'll take questions throughout the course of this. So if you have any questions or comments, just put them out there, and we'll talk about it as well when we get into it. So Monday is going to be the lightest week that we have. Monday and Friday. Friday is energy, so that'll be in the pre-market. That'll be important. Monday, the only one that I really care about on Monday, quite frankly, is McDonald's, because McDonald's is down 15% year to date. We'll talk more about them, but kind of thinking McDonald's is either a value trap or there's actually value there. Still doing due diligence on that, but that one, I don't expect some monumental earnings, but I do want to see kind of how they're thinking about international growth scales. And then after hours, nothing really that exciting. Symbiotic, I know a lot of people like that company, but nothing too crazy. Then Tuesday, you've got PayPal and SoFi, all right? That starts off the morning. That's going to be really important. You got Pfizer, Merck, a bunch of pharmaceutical companies, JetBlue, that company's been under pressure as an airlines this entire year. That's important. BP, energy company. After the close on Tuesday, you got AMD, Microsoft, and Starbucks. I think those three are big, and I'll talk about why they're big. Pinterest is there. That's important as well. Then on Wednesday, after hours, you got Meta, Qualcomm. Those are going to be important. ARM. That's going to be important as well. And then Thursday is the biggest day. We have Apple, Intel, Coinbase, Amazon, Snapchat, DraftKings, Wendy's, Roblox, Cloudflare, Hershey's, Roku, Twilio, Shell. I mean, it's going to be a hell of a week. So Tuesday, Wednesday, Thursday, it's going to be hard to get any sleep analyzing all this stuff. But then Friday and Monday kind of chills out a little bit. And so we'll have a lot to discuss. So I think we'll start off with tech earnings. I want to start off with tech earnings. I think there's a couple themes this week that I want to focus on and go into. And then if you have any comments, you can put them in the chat and we'll discuss them as well. So let's start off with big tech earnings. Big tech earnings. Okay, so there is a theme that's happening in big tech right now. And that theme that is incredibly important to me is this idea that the market is not happy with the hyperscalers, Google, Amazon, Microsoft, Meta, spending the amount of money they're spending on CapEx. As my camera dies, I thought I charged the camera before the Sunday stream. All right, so we'll have to settle with this one. There's a theme that they're spending way too much CapEx. And as a result of spending that much CapEx, unfortunately, it's creating the dynamics where the market is like, all right, so you guys are spending a lot of money. And basically what happened with earnings this week, Google was like, hey, we spent 14 billion. And the market was like, that's awesome. We're so happy you spent all this money on AI. It's very important. We're selling the fuck out of this stock. We're done. We're gone. And it was just like, it was the weirdest thing ever to me, because it's like, we knew this narrative already in Q1. That's why Meta ended up tanking. And so it was very weird to me, because the market already went through this kind of shuffle with Meta tanking because they spent too much on CapEx. That's when Meta got to like 390, and that was a great dip buy if anyone got it. But then again, it happened with Google. They beat on the top line, beat on the bottom line. They're growing 14% year over year. It's a very big company. YouTube slightly missed because the comps are a little bit hard and a bit less comparable given what they were last year. But the CapEx is what nuked them. And so Brett says, nice hat. Brett, thank you for being here. Shout out to you being here. I think the big thing that I'm looking for in the context of CapEx spend is the market being able to internalize that even though Meta, Amazon, and Microsoft are spending thousands and thousands, and I mean, they're buying thousands and thousands of GPUs, hundreds of thousands, spending billions of dollars, that's okay. And that the ROI is going to be there in the future. One stat for you guys, Meta has 350,000 GPUs. That's worth about 14 billion. XAI has about 100,000. That's worth about 2.4 billion. Tesla has 85,000. That's worth 3.4 billion. And then Andreessen Horowitz, the venture capital firm, they ended up stockpiling 20,000 GPUs, and that is worth $800 million. So we know the GPU spend is there, and that'll be important in the context of NVIDIA. But the market is very scared about if CapEx is actually going to result in ROI. And I don't blame them. It's not like I'm like mad that the market sold off Google and that they were like annoyed that Google's spending so much money. I just think it's not the most rational reason to sell them off. I do think Google was getting a little expensive as the PE was expanding. So like, okay, that's fine. But say that you're selling it because it's expensive. Don't say you're selling it because they're not getting a return on their CapEx. It's like, you don't expect them to get their return yet. And if they don't get a return in a year, then yeah, then you can tank the stock. You can tank all of these tech companies if they're not showing some level of acceleration in revenue based on this AI data center build out. So going into this week, Microsoft, Amazon, Meta, I am curious. Apple's not really spending that much on GPUs. When those guys say, hey, we're spending money, not seeing the ROI yet. We're still growing. We're still beating our numbers. We're still accelerating, but not like astronomical growth like you guys want. Will the market be happy about that? Will the market just internalize it, or will the market be upset? And so we're going to see kind of how that plays out. For Microsoft and Amazon specifically, I'm curious how AI Azure and AI AWS is going. AWS is already at $100 billion TTM run rate. Absolutely incredible stuff. Azure is also growing, I think, 22% as per last quarter year over year. So I think they're going to keep growing. I think healthy 15% year over year on both of those businesses is going to be fine, but the CapEx spend is going to be the most important. Specifically for Amazon, operating income margins, if that is above 10%, I think Amazon breaks out back to the 200s. If it's not, or if it's flat, I think it either goes down or the stock stays flat, because at this point, the only thing people really care about on Amazon is if they can make any money off of the revenue they're bringing in. On Apple, and let me know what you guys think about these companies as well as I'm typing them in, and I'll read some comments as we're going through it. On Apple, I think the only thing that matters about Apple is about telling us, hey, AI and the consumer access to AI, we are the portal for that. I think Tim Cook needs to not talk about anything. Tim Cook needs to sound like Dan Ives talking about Apple on the Apple earnings. I mean, like, if he talks about the Vision Pro that no one cares about, that's going to be a dud. If he talks about services, that's going to be a dud. He needs to say, hey, guys, so this iPhone 16, we're ramping up to get it out there, and we think we're going to sell a lot of this shit. And we think AI is going to be accessed through most people. LLMs, with most of your family and friends probably don't even know what an LLM is. Tim Cook needs to say, I'm going to be the person to bring LLMs to the world. Tim Cook needs a godlike complex on this earnings, because the stock is fundamentally, in my opinion, just on a like, you're paying a very high PE for 0% growth, but you're buying it because Daddy Buffett's buying it, or he was buying it. He sold it, but he still has a lot. And you're buying it because it's Apple, right? It's not a banana, it's Apple. So I think Cook needs to come out on the earnings and just be like, hey, like, the world wants AI. They don't have access to AI. Consumers need AI. I'm the one who's going to provide AI. I have all the phones that people need to be able to use AI. People are not going to be on their desktops using AI all day. So you've got to buy Apple. And so I think if he comes with the energy, I think Apple would be good along with the buybacks. They're probably going to buy back another $7 to $10 billion of stock. If not, we might see a little bit of a dip there. And then on Meta, there's two things I'm thinking about from Meta that I'm actually curious for them to be able to produce in a better way. Their ads business, a couple of studies showed on their ads business that they are going to be really strong in the month of June. And I think that that's going to be the case as well from some independent studies I read. So if that's the case, Instagram ads should be really strong in the month of June. That's going to be important. Number two, this wearables and their glasses, that's going to be important as well. Because I think we need to see how much the Ray-Bans that they invested in, along with the sort of meta AI element to Ray-Bans, are leading to people that are actually like taking pictures and videos with their glasses. We know the Snapchat glasses like failed. They just never really took off. I think it's a really good idea, by the way, like in certain use cases. Now I think people wearing it all day, that's not going to happen, but maybe that's something that produces real monetization for them from a wearables perspective. And then finally, Threads has 175 million monthly active users. I want to know when Zucks is going to put some money on Threads, because at some point we need to see if Threads. Oh, you guys saw fireworks? You saw fireworks? That's probably because no, that's probably because of StreamYard's AI, dude. It's so weird. They like randomly show the like button and then fireworks. It's so weird how they trigger it. But I want to see Threads make money, because I'm not on Threads. I don't use it. Let me know in the chat if you use it. But I do think that Threads is, if they have 175 million users, it's time for them to make some money off of this thing. And if they're going to make some money off of that, that should be another tailwind that the market is probably not expecting in the context of big tech. What do you guys think about big tech? And then we'll move on to semis. What do you think about big tech? No one uses Threads. Look, 175 million people monthly still use Threads. I mean, at least they go to it, right? A monthly active user is defined as someone who came in the past month. So maybe they don't definitively use, they're not super engaged, but they open the app, which is more than pretty much every consumer startup on the planet. And, you know, the reason why Threads is number one on the App Store and has been for the past almost year and a half is because they just push it via Instagram. They already have all the users. They just say, hey, make a Threads account, and then people sign up. And then boom. Yeah, number one in social networking, dude. Absolutely insane. This is the power of distribution. This is why it's so important. WhatsApp monetization before Threads. Didn't they start monetizing WhatsApp, Thomas? Not like a ton, but they've started at least beginning, I think, WhatsApp ads and certain tests. Probably not enough to like really report on earnings if I'm not wrong, but yeah, WhatsApp monetization is way more of a priority than Threads. And WhatsApp also has 100 million monthly actives in the United States alone, and I think it has like 2.4 billion every single month. Accidental clicks from Instagram. Yes, that's what gets us there. Chamu says, I use Threads for my barbecue post. Oh my gosh, this freaking camera, dude. I thought I charged it. I guess I did not charge the camera. We'll turn it on again in a bit. But yeah, so Threads has some users. I want to see where the monetization comes for Threads, because I mean, dude, 175 million monthly actives. You talk about a CPM of like $5 per 1,000 impressions. I mean, I could imagine them doing at least 250 million a year of revenue just off Threads, if not closer to 500 million. But they would need advertisers and brand partners to like really buy in, because Twitter, there was an article that came over the weekend. Twitter is down 85% year over year in terms of its revenue. So I don't know. Threads is going to really need to be able to show the targeting makes sense over Twitter. I do think Twitter has better content than Threads, but Threads is a little bit more family friendly given, the censorship apparently that Threads does, especially with political topics. Robinhood overnight markets just opened. Bitcoin is at 68,871. It actually opened 17 minutes ago. Palantir 2742. Again, the volume of this is not as high, but they are open. S&P at 546. Robinhood 2130. CrowdStrike 257. IWM 225. We'll talk about that in a second. QQQ 465. And then Tesla, NVIDIA's at 114. Tesla's at 221. PayPal 58.49. Then SoFi 7.49. SoFi is now back at the 24-hour markets, and we'll talk about SoFi today as well. Amit, can you please make Amazon go up this week? Thanks in advance. I will try. My dad owns some Amazon, so it would be nice to see Amazon get through the Bezos wall of selling. But we'll see. We'll see if they can put up the numbers to get there. And honestly, Amazon struggled so much this year. It's still up a lot, but it struggled so much to get out of this 180 to 190 range that if it finally breaks out, I don't think it's coming back. But it's going to have to like definitively break out. Real quick on Bitcoin right here. There you go. 68,841, baby, up 1.3%. I did a video on the Trump presentation that he gave on Bitcoin, the keynote. Look, I thought his points were good. I thought the presentation wasn't the best. I think it was a little bit too rambly, but overall, he made the right arguments. And some of the senators proposed buying 1 million Bitcoin over the next 5 years, which is pretty incredible if they were to be able to do that. Now, Trump didn't say he would do that. He just said he wouldn't sell the Bitcoin. He didn't say he would buy 1 million Bitcoin, but that seems like it might become part of the agenda, which is very bullish, but not sure if that's going to end up happening. But overall, he said the stuff that the Bitcoin people wanted him to say. And it was a decent keynote, even though I thought it was a little bit too rambly. All right, so that was what we had for Big Tech. Let's talk about semis. So we've got 4 companies reporting this week: AMD, Intel, ARM, and Qualcomm. I'm sure there's some other semi companies that I'm forgetting, but those are the ones that are reporting. Now, Qualcomm, I think, is probably going to have the best of the earnings because I think they have the best story going in. Outside of Broadcom. I think Qualcomm has one of the best stories going into this cycle. Qualcomm, Broadcom, and NVIDIA. Remember, all this CapEx spend by the hyperscalers, all of it's going to the semi companies, right? It's going to ASML, it's going to NVIDIA, it's going to SMCI, it's going to Dell. Not all of it's literally going to each company, but all these companies are splitting up those billions of dollars. NVIDIA is getting the bulk of it because they all play a pivotal role in the life cycle of making sure that GPUs are deployable, that they have the liquid cooling that's needed, that the server IT infrastructure is there. So all of that is bullish for a lot of these companies. So I think Qualcomm is going to have one of the best earnings. The other 3, I'm not so sure about. So AMD is down 12%. It's under 140, which is quite incredible. I mean, this thing was at 225 in March, so it has had the opposite of a year of NVIDIA. It's still up a decent amount for the year. AMD is currently up. Oh, wow. AMD's negative for the year. Look at this. AMD's down 2% for the year. Wow. It's been a while since I looked at the year to date, I guess, on that. So yeah, so AMD's down 12% in the past month, 2% year to date. The company has not had solid guidance or meaningful earnings beats over the past 2 quarters. And I love Lisa Su, but the numbers just haven't been amazing. So Piper Sandler has them as their top pick for H2. And they believe that they're going to benefit a lot from the tailwinds in the latter part of the year because NVIDIA's already benefited so much. I don't know if that's going to be the case. I think this earnings, I would be very skeptical of saying at 138 it's a bargain, especially if we see a little bit more of pain in the NASDAQ. But I definitely don't think it's like atrocious. At 225, I remember that morning open when we saw it open at 220. It was insanity. And so it didn't really make sense there. And I only know that because Jose, who will be on the market open tomorrow, AMD's the second largest position. And even when I talked to him about AMD, he's like, dude, these numbers are just like, they're not the numbers you need to be able to justify the multiple it's getting. NVIDIA is justifying that multiple and more. So AMD, not sure what's going to happen, but if they have some decent earnings, hopefully that's an inflection point to get into the second half of the year. Intel only went up to $35. I think it hit 36 last week because Trump said he didn't want to protect Taiwan as much as we currently were without some compensation. As a result, the market said, okay, so we're not going to be buying TSMC chips if Trump gets elected. We're going to be buying Intel chips. So Intel's foundry business, even though it's not going to be profitable for the next couple of years till 2027, which is why Intel tanked from 50 to 30 over the past 7 months. Trump likes America and he likes American chips over Taiwanese chips. Therefore, we should buy Intel. It was an absolute ridiculous reason for Intel to pump. I mean, is there some truth to it? Sure, but I don't even think Trump really means that. I think he's just saying whatever he needs to say to get through the campaign. I don't think he's going to stop really protecting Taiwan as much. So as a result, that rotation into Intel when all the semis were red on Monday, but Intel was green, it was stupid. And Intel gave up a lot of the gains that they had coming back down to the $32 range. Intel right here at $31.35. So as a result of that, I don't think we're going to get anything good from these earnings. They said they're not going to be profitable. They're not growing. Buybacks or whatever, but it's not a company that's really accelerating in a meaningful capacity. That foundry business is incredibly important. And 2027, we should have more clarity on that because that's when it'll be profitable. And again, if a company tells you 3 years before they're going to be profitable, hey, we're not going to be profitable until XYZ date, you got to believe them. Unless it's Alex Karp, who in 2022 says we're not going to be profitable until 2025 and then, gives us a little bit of a gap profitability. But outside of that, I believe Intel that they're not going to be profitable. So I like Intel from a wheeling perspective. I like selling covered calls on Intel because it stays within a certain range. But a breakout earnings, I don't know if they're going to be able to put up those numbers. And so we'll see. We'll see if that happens. Peter, thank you for the $20 super chat. I was negative on the Trump Bitcoin conference at first, but the more I thought about it, he was late coming out because he just told him 10 kids got blown up in Israel. So he definitely was thrown off by that. it was positive for Bitcoin. Yeah, the attack by Hezbollah on Israel that killed 10 children. We'll talk about them more in the market open tomorrow. That was definitely something that I think threw him off his game because he found out about that right before he went live, and then he had to kind of address it live. But the more I thought about it as well, I think he said the stuff he needed to say. So, was the speech amazing? No, but like it was just a regular campaign speech for him where he went off topic and, just said a bunch of stuff. Ultimately, he said Gary Gensler would be fired. He would not sell any Bitcoin. He believes in a crypto-friendly administration with the right regulations to allow crypto companies to thrive. So it's much more than the Democrats have said, or that Kamala Harris has said. Now, maybe that'll change. But if that's the case, if you love crypto and like a lot of your net worth is there, I think at some point you're kind of forced to vote for Trump or RFK because they're the most friendly ones on crypto. Bitcoin right now, 68,933. Let's see if we can get to 69,000. There's some green candles right there. Let's see. That'll definitely affect a lot of the crypto stocks as well after hours. So those are my thoughts on semis. Last company was ARM. ARM is the most overvalued company in the stock market. It has a price of sales of 48. It makes absolutely no sense. But 90% of their float is owned by SoftBank. So there's only 10% of the float available. Basically, they have like 900 million shares, but only 90 million are available to be traded. And as a result of that, that is what's causing the squeeze on ARM. I think if SoftBank ever dumps their shares on the open market, ARM will collapse dramatically. So ARM's going to do well. It's getting upgraded by all the Wall Street firms because they're just assuming it only has 90 million shares, which is a stupid reason. But ARM right now, short float on ARM is 8%. I do think that ARM has a definitive moat. Their growth is just nowhere near worth paying 48 times price of sales. So ARM, I don't think is going to have like an incredible earnings. I think they'll have a decent earnings, but I don't know if it's an earnings that gets them back to that $200 range. I mean, ARM right now, $156 billion market cap, doing $3 billion in revenue. It's a little tough to justify the valuation, but I think overall they should have a decent earnings and shouldn't be too bad this week. Definitely not like a 10% decline, but I don't know if it's a 20% gain after they report as well. Andre says I bought $20,000 worth of Google at $95 and sold it at $130 last year. End up buying figs at $7. Bad trade. Yeah, I mean, look, it happens. I think the thing is when anyone who sold the hyperscalers before their run started, I would call it of like March this year after Q1 earnings or Q4 2023 earnings, it was a bit of a mistake because no one knew how crazy they were going to take off. However, if you bought it 2022 or early 2023, you still made a decent amount of money, right? You've got Google at 95, sold it at 130. Yeah, it's at 180 right now or 160. It sucks, but you still made a good return. So I don't think anyone expected, outside of like Tom Lee and a couple of other probably bullish people on the street, they thought hyperscalers would carry this much weight in the economy. And obviously the Mag 7 making up the majority of the S&P in terms of its gains. But that's what happened. And so now I think one of the themes is in this market, and this is what's going to be so important this week. This is why this week's going to be it's going to be definitive, is like, is the market willing to say Microsoft at 420, Meta at 490, Google at 170, Amazon at 185. We're okay with you guys having that premium. We're okay with the amount of CapEx you're spending. We're okay with the fact that you guys are realizing it's a kind of winner takes all market and you're going balls to the wall for AI, even if you guys don't even fully understand your own AI vision. Because I think a lot of these companies, they have a vision, but they probably don't fully understand it the way they understand their core competencies, like Amazon with cloud or with Google with advertising. The market's willing to accept that for now, until the market doesn't accept it. And we got a hint and a preview of that this week with the Google. And so this week or last week, this week is going to be important of, do we continue that preview of the market just not accepting this premium on the hyperscalers? And if it's true, we will see the NASDAQ fall by 5%. We will see the S&P fall by 5%, if not more, if all of them take a hit. I think they might take a slight hit this week if I had to bet, but that hit is a buy the dip. Like, I don't think people are rushing. I don't think Bill Ackman's rushing to get out of his Google at 160. Even though he bought it at 94, right? I think he's thinking, hey, this is finally we got a cheaper price that maybe I can buy back into. So I don't think any of the earnings are going to be thesis breaking for the market, but I do think if we see a dip, it will eventually get bought up later as well. Palantir's up 30 cents on Robinhood. Yeah, let me give an update on that. So Robinhood overnight trading, we've got Palantir at 27.48, not bad. Volume is 10,000 shares. Robinhood 2152, that's up 1.5%. Volume is 12,000 shares. IWM, again, we'll talk about that. That's up 0.5%. That is 24,000 in volume. And then Tesla's at 221. That's up about 0.7%. Volume on that is 100,000 shares. Okay. Not bad. Bay Ray says AMD is right at the bottom of very strong technical support. Earnings will be a massive move one way or the other. What is the RSI on AMD? Because I agree with you. I haven't seen it at these levels in a long time. Yeah, RSI on the monthly is at 41, so that's decent. On the daily, it's at 46. So it's not super overbought. Definitely not super oversold. But yes, I agree. Earnings is going to be a move one way or to the other. Sunday stream, what the heck? We're here, baby. We got a lot to talk about. Going into earnings. Okay, so that's my thoughts on semis. So we talked about big tech. We talked about semis. Let's talk about the tech of the fins, aka the FinTech. We got SoFi and PayPal. I actually thought SoFi was tomorrow. SoFi's not tomorrow. SoFi's going to be on Tuesday. So SoFi and PayPal is going to be very important. So here are my thoughts on SoFi. It's very simple. I think Noto has to make everyone feel that SoFi is going to be one of the coolest financial tech companies on the planet, that it's more than a bank. And if he does that, market will reward him. If he doesn't, I think we're going to have some issues. Now, granted, the thing I like about SoFi is it's broke out of a monthly or a 6-month range. So we're back into that 740 range. IWM, I think, is going to continue to do well. Again, we'll talk about them in a second. But if small caps do well, SoFi will see momentum from that. Their guidance, I think, might be raised in H2 because they know a rate cut is definitively coming in September. Remember, Noto said if they get rate cuts, they'll be able to do more lending, more liquidity, more top-line revenue growth. They can beat on guidance if they get the rate cut. It seems all but inevitable we're getting a freaking rate cut. And so I think SoFi actually is setting up, even if it tanks on earnings, it's setting up to have a really good macro tailwind going to September. And I wouldn't want to be short here on SoFi because the time to be short was throughout the majority of the year. Now I think it's starting to break out. The one problem is the 18% of the shares that are sold short, about almost 200 million shares are sold short, which is annoying, right? So I think the shorts ultimately have to figure out, hey, has something changed about the company? Is this AWS, a FinTech thing, real? I don't think it's real yet, but I think Noto, if he can sell it as if it's real, which is what I think he needs to do, then maybe it can kind of become real, this whole perception reality thing, even if it's not real yet. But if he can scare the shorts, maybe the shorts decide to go away. I mean, let's use Chris as a case study, okay? Chris, one of my good friends on the channel, right? Chris went short Palantir, did some Iron Condor thingamajiggy, and then he did that at 26. Palantir starts going at 29. Now Palantir is right back down to the range that he would have been in the money, making some profit on the short, but he got scared. Why did he get scared? Because he realized, don't fuck with Palantir, right? It's like, you just don't do that. So whether it's the Dan Ives upgrade or the $50 price target, like the reason it went to 29, even though all of us can agree, yes, it was running too quick. It was 17 cents away from $30. Like it was really quick. The reason it did that is because Palantir is cool, right? And people are going to talk about it. People are going to make narratives about it, stories about it. Dan Ives is going to go on national television and say, $50. I think this thing is just getting started. And then you're going to have people buy the stock. No one's doing that about SoFi. No one's doing it. No one's super excited about SoFi. And so if that excitement isn't there, why would the shorts, who have very profitably done their shorts correctly, this entire year, why would they be afraid to leave? And so that's why I'm a little bit afraid of SoFi, but I do think that rate cut is so damn bullish for their business in particular because they're a bank. They lend out. When rates come down, that's great for banks. And that's obviously great for overall lending in the broader market, and that's great for their guidance. So I think SoFi will do well as rates come down, but Noto's got to get the shorts to be a little more scared. Ryan Cohen, thank you for mentioning in the chat. Who mentioned Ryan Cohen in the chat? Katie, thank you for mentioning Ryan Cohen in the chat. I just went to his Twitter. Maybe he is having a bit of a little crisis right here. He changed his profile picture to a girl. A black and white, looks like an AI image of something. I think it's an AI image of him. And then he said Kamala 2069 a couple of days ago after he said Trump July. Yeah, this is very interesting. Very interesting. Not sure what's going on with GameStop or Ryan Cohen. But this is why during the whole GameStop saga in May, my thesis on the show was like, don't chase this thing. Like, no matter what happens, just, I know how fun it could have been, like Faraday Future, all that. It's just not worth the chase. Instead, Robinhood benefits from all of that. There's like a real business right there. But the actual meme stocks, it's just tough, dude. You just never know what's going to happen. Okay, so that's what we had on SoFi. Let's talk about PayPal. All right. So in the context of PayPal, look, the same thing with Noto. Alex Chris needs to instill confidence in the market. If you do a DCF on PayPal and you get to this $57 price, you are talking about 0%, not one, not two, 0% free cash flow growth and top line revenue growth over the next 10 years up until 2033. If that makes no sense to you, then $57 makes no sense. It is fundamentally and terminally undervalued. However, the market doesn't give a shit. And so I think PayPal needs to rewrite the narrative. I think if they would like, Steve has said many times on the channel, they can buy back some more stock. That would really help as well, because they would make them it would make the market see these guys are very serious that they think they're undervalued. And then all those innovations that Chris talked about in January of like the advertising and the receipts and all this crazy stuff, has any progress been made on that? It's been basically 7 months when you rolled out the features. Is that showing more top line growth on transaction margins, on Braintree, on the broader monthly active users? Like, is that helping? So I think we're going to need to hear from that. If we do, maybe we get closer to 65, 70. But at this point, I think it's really going to be a question on Alex Chris instilling confidence in the market. And they had a really good fireside chat with the CFO a couple of months ago. So hopefully earnings also continues to maintain some of that momentum. But I'm not super excited for PayPal. I mean, at this point, it's like, it is what it is. It's got to actually show Bitcoin right here, 68,858. It's got to actually show that they're ready to take the next pivot. I mean, there's a world in which we melt up towards the end of the year and everything comes up like PayPal, but I think it's still a stock picker's market. And if you pick PayPal, like I did in the beginning of the year, you really haven't moved. Maybe you're up, maybe you're down a little bit, or maybe you're just flat the whole year on PayPal. So I think they have to have something that changes the narrative. And unless PayPal and SoFi do that, SoFi at least has the rate cut as the tailwind. PayPal, I don't think that matters. Then we're not going to see too much momentum on their earnings as well. Okay. Other companies I am looking at right now. So Coinbase, I'm interested in Coinbase. I want to see the crypto volumes. Let me know off this list what you guys think in the chat that are interesting. And then we'll highlight some of the ones you guys like. Coinbase, I care about the crypto volumes. I think that'll be an indicator for Robinhood's crypto volumes. Snapchat, I think, is a sleeper this week to outperform, primarily because it's been beat up for the past 2 years, and their AI subscription platform, like it's called My AI, that is growing. And I think it had like, if I'm not wrong, 7 million subscribers last quarter. I think that's growing, and I think their monthly actives is going to grow as well. So I think Snapchat breaks out of this 14, 15 range closer to 20. I'm not doing any plays on it because I don't trust Evan Spiegel or Snapchat, but I do think Snapchat is primed to break out. And if Meta has a good earnings, that'll help. If Meta has a crappy earnings, that is not going to help Snapchat. The other company I'm looking at is Starbucks. Really interested to see if Starbucks can change their brand image. Starbucks drinks are still expensive. I was watching a video yesterday of a couple in New York City that went to do a review on all the different chais in New York City. And they went to Starbucks as their last option. Starbucks calls it chai tea, which makes no sense because chai means tea. But like, it was the most expensive out of all 7 options at like $7.50 for a small iced chai. So I don't think the prices got any better. China exposure definitely didn't get any better. Elliott Management, private equity firm, they just took a stake in Starbucks. I think they're going to turn things around, but that's going to take a couple quarters to get to. So I don't really know what to expect. The stock's down a lot already, so maybe it's just down so much that investors aren't going to sell as long as they like somewhat hit their numbers or the pain isn't that bad. Year to date, it's down 22%. But in general, I'm not expecting big things for Starbucks. I'm more so expecting, like, is the CEO ready to announce something that fundamentally changes the paradigm of the business and is a new era for Starbucks, like an entire global sort of, not rebrand, but new initiative that they would take. And I don't know if we're going to see that yet for Starbucks. Andre Taylor, thank you for the $5 super chat. I didn't expect you to read my comment. You didn't have to send the $5, man, but thank you. Thank you for being here. And thank you everyone for being here tonight on this Sunday stream. Yes, I'll be on Finance Junkies at 9. I'll be on Finance Junkies at 9 p.m. If anyone wants to link to that, let me put it in the chat as well. If anyone wants to link. Matt Money says if Starbucks was smart, they would buy Dutch Bros. The market cap of Dutch Bros, again, I think it's under 10 billion. Am I wrong about that? Yeah, 6.7 billion. I mean, look, I don't know how much cash Starbucks has. I'll try to check that in a second, but yeah, maybe that is the way. Maybe they need to just like find a way to change the brand from what it was before. Because I mean, and also people are reporting that like if you go into a Starbucks, there's no more places to sit now. It's like the seating has become a liability on the expenses. So like certain Starbucks are like removing the seating area, which was the entire appeal of Starbucks, is that you could sit there with free Wi-Fi and just like drink an overpriced coffee and act like you were doing work, but you were never doing work. I mean, I remember, dude, when I used to go to Starbucks and like, oh, I'm doing work, dude. I never did any fucking work. Like anyone who goes to a coffee shop to do work, 99% of those people do not do work. They sit in the coffee shop with the Apple logo on their Mac with their headphones in and their caramel latte. And they want to make the perception of them seem as if they're doing work to the outside world. No one's fucking doing any work. But the 1% of people that are doing it, they really like doing it at Starbucks. And now that's not there. So that's going to be really interesting to see how Starbucks navigates that as well going into the latter half of the year. Another one I'm looking at is Roblox. Roblox has had a tough year. They just got hit with a big controversy in terms of potential pedophilia that's going on in the website with kids and hackers that are getting into it. So I think they've got to talk about that and figure out how they can make the website more safe while growing top line revenue. Roblox is still not profitable either. I don't really see the big vision. The metaverse is not that interesting to me. So curious to at least hear what they're saying. We talked about Apple, talked about Amazon. DraftKings is another one that I think is on the verge of profitability. They're growing 80% year over year. I think DraftKings will have a strong earnings. I don't know if the street will respect it. There have been some new regulations that were proposed in Illinois about taxing online betting companies much higher than they're currently taxed. And that's where DraftKings took a little bit of a hit a couple months ago. So that'll be an interesting one to look at. Also, Square, that'll be interesting. Twilio, Roku, Big Bear AI, smaller AI company, actually works with Palantir. BP, ExxonMobil, Chevron, the energy companies, definitely would like to hear from them. And then Carvana. Carvana is up year to date a lot. Carvana, I mean, we could have all bought Carvana in the beginning of the year and just, yeah. Carvana's up 162% year to date. It's outperforming NVIDIA. They had a surprise profit last quarter. So if they continue to build on that momentum, hopefully Carvana does well. I don't know if Carvana is undervalued or overvalued, quite frankly. I would have to look at the financials. Market cap is at 26 billion. But that one is going to be another one that I'm looking at this week as well. Arista, Meta. Yep, that's going to be very important. So we're going to have to see that. Brookfield on Friday. That's another one that's going to be super important. Big Billy at Carvana at 4. Do you still have it, Big Billy? Or did you sell at 7? That was me with Neo. I had it at 3. Neo was the first stock I bought on Robinhood. Sold it at 6. Sucker went to fucking $60. Dude, I was so pissed off. I saw it at 11 one day. I was like, oh, okay. I missed it from 4 to 11. Then it goes at 20. I'm like, not going to go past 20. It's fucking $20. Then it goes to 25. And I'm like, there's no fucking way. Then it goes to 30. I'm like, Neo, I missed a 10X. I had a 10X and it was gone. Then it just goes to 40 and 50 and 60. And I'm like, okay, this is stupid. Like, this is just dumb. This has got to collapse eventually. Then it collapses. But I could have had a 20X. Now, the funny thing is, I don't know if I would have sold if it got to 60. I was like, well, let's let this thing go to 100, right? Tesla's at 1,000 at the time, pre-split. Neo's the second up. So maybe it's good that I sold at $6, but Neo definitely exploded. Sold around 40. Yeah, I can't blame you. That's a 10X. So let's go. Are you buying more Hood? No, if Hood gets below 21 again, I'll be buying. I do like it at these levels. At 2150. I think the lowest we've been able to get Hood really this week has been 2085. That lasted for a little bit, but the average low we've been getting on Hood is around 2170. So we'll see how it performs over the coming weeks. I think the only thing the market cares about is earnings right now. Bitcoin, S&P, they don't really care how Hood is being treated as a proxy. They want earnings. And if earnings is well for Robinhood, then I think Hood will do well. I think it could also tank after earnings because August might be choppy, which we'll talk about in a second. But overall, I think Robinhood's in the right place. And I think the growth is going to be pretty substantial going into Q2. And so overall, that should be good for Robinhood. Okay, cool. So last couple things I want to talk about, and then I'm out of here in about 8 minutes, is macro in the context of IWM. So here's a chart I want to show people that I showed at the Trump stream yesterday. Some people might have seen it, might have not, but incredibly interesting chart right here. Let me pull it up. The IWM has broken above its 3-year trend line against the S&P. And this right here is just like, I think it's a piece of technical news that really can't be ignored in a meaningful way. I mean, this is 3 years of the IWM. You can see right there, it broke above on Friday above its resistance with the S&P. Every time it tried to break above it, whether it was February 2023 rejected, December 2023 rejected. That's when the S&P started to take off. Or in February of 2021 rejected. So I do think the small cap summer thesis by Mr. Tom Lee is going to probably be correct as long as the entire market doesn't collapse. Now, what do I mean by the entire market collapsing? I think the entire market collapsing would consist of weakness in the labor market. And so far, we haven't seen dramatic weakness, even though we've seen some weakness in the labor market. The Fed rate cut, again, I know it sounds like a broken record, but that Fed rate cut is what stops the labor market from bleeding to 4, 5, 6, 7% unemployment. Right now, we're at 4.1%, up from 3.4%. So we're up 60 basis points on it. The way to not be up 600 basis points on it, or at least, another 1 or 2% in the next coming months, is to make sure the Fed cuts rates. That is going to be really good for mortgage rates. We saw housing data come last week. Highest price for an average home in the United States in the past 5 years, and lowest number of homes sold in the past 40 years in 2024, in the first half of 2024. Why is that happening? Because not only are homes expensive, we don't have enough homes. Why? Because people aren't building enough homes. Why? Because rates are too high. And if mortgages are 7%, no one wants to buy a home or even sell their home because they're going to have to get into a home that's a 7% mortgage. So we're going to need rates to come down. That'll be a stimulus for the broader housing market. Housing inflation is coming down, even if the Fed doesn't really see that exact data. So we know that's not going to necessarily overheat CPI. I believe we are getting a 2-handle on CPI for July. Oil has been below 80 for the far majority of July, which has been really nice to see. Over the past month, it's down 5% WTI crude. So oil inflation is going to be good. And we're going to get things set up for IWMs to do, for the Russell to do well. Now, the common argument against is, well, there's a lot of junk companies in the Russell. There are, 100%. However, the tangible book values of those companies will go higher as they're able to refinance their debt, A, and B, they're already growing earnings significantly faster than the S&P 500 earnings, because most of those companies are regarded in the Mag 7. So the IWM is growing earnings faster than the S&P, even if the quality of those earnings are not substantial, meaning they're not a lot of profitable companies. And their debt is going to become lower, just like the KRE, the Regional Banking Index, which is part of the, I think, 20% of the IWM. KRE is broken out 10% this month because all these regional banks are going to get ready to decrease the amount of losses they have on their portfolios when rates come down. Also, a lot of the regional banks, I was reading an article today, they've started selling some of their junk loans. So I think it might be Truist, or it might be another bank I'm thinking of, but they sold bonds at that they issued at 2.8% in 2020. Currently, rates are at 5.5%. So they're taking a nice loss on those, but they're getting ready to take that money and put it into new bonds that they believe, when the Fed cuts rates, will yield way more than the Fed's funds rate. And because they've been so efficient over the past 2 years, kind of it was a wake-up call for all the regional banks to get their shit together. And a lot of them, quite frankly, have done pretty well getting their shit together, Truist being one of the best ones. And then you have Zions and a couple others. They're prepared for when the Fed is going to cut rates. And we know this for a fact because the stress test that the Fed did, which is a test that puts all the banks to stress quite literally and sees if they can survive if we were to have an economic collapse, all the banks passed that test flawlessly. And I say flawlessly because empirically they've increased their dividend and their buybacks. Bank of America, JP Morgan, Morgan Stanley, Citibank, they all increased the dividend by about 10%. And then Bank of America issued another $25 billion of buyback. So the banks are doing well. Financials have outperformed massively throughout this entire earnings cycle. So I don't see the massive bear case for small caps because I think the broader economy is holding up. Now, again, small caps are junky companies. So you've got to ask yourself, will that hold up if we have some real weakness? I don't think we are on the precipice of seeing a real weakness yet. Therefore, I think small caps will be good. And I think the market does not want NVIDIA, which closed that Friday at 113, to be $250 by the end of the year, or 200, or even 150, quite frankly. I think they would rather have the Russell get closer to 300 because there is a little bit more potential there in terms of the rotation based on the earnings growth versus on NVIDIA. And so I don't think the Russell is going to stay elevated for a long time, but I think as a trade over the next 6 months, the thesis is starting to make sense. And once you inject more liquidity into the system with the rate cuts, that's only going to be a tailwind. So I think that's going to be relatively strong for the Russell. Having said that, so that's the small cap part of my macro thesis of what's going on. Now, the NASDAQ, I am a little worried about going into August because historically August has been a tough time for the NASDAQ. And if these companies, aka big tech, do not produce decent earnings, let's not even say incredible earnings or great earnings, but decent earnings, then the market's going to punish them. And if the market punishes them, we get some punishment in the NASDAQ and the S&P. I think that is a dip to buy. I do not think if the NASDAQ goes to 430, which is the next level of support, it's at 460. Remember, we were at 500 a couple weeks ago, so we've come down already substantially. Or the S&P goes to 510, 520. That's something to be scared of. I think the fundamental story is intact unless the market like unilaterally believes the AI ROI is not coming in the next couple years, meaning FSD is not going to be a real thing. ChatGPT is just a little toy, yada, yada, yada. As long as the market feels, hey, this is going to be real, like this revolution, this whole Jensen Huang, when he gets on the earnings call and he talks about accelerated computing, all this generative, like this is real stuff. And in ServiceNow's earnings this week, which were really good earnings for the SaaS sector, kind of showed that AI is starting to become a tailwind. They're up 14% for the week. I think as long as the market thinks that that story is intact, this is a dip you buy. Copilot, which is Microsoft's AI subscription platform, that is probably going to get closer to 70% client penetration, whereas last year it was at 20% client penetration. That's research coming from Wedbush. So let's say it's at 50% or 40% penetration. We are starting to see some more penetration with AI in the enterprise, and that's going to lead to new revenues for Microsoft. So I think if the market fundamentally believes that story is intact, they're going to buy the dip, even if they're emotional at selling it off. And I think we as retail also shouldn't be too worried about buying the dip as well. So I think the macro is going to be okay. I think IWM is going to be okay. I think if the NASDAQ or the S&P collapses, I think that's okay as well. It's up a lot year to date. If it falls another 5%, it's honestly kind of healthy. Like, it's not something where I'll be like, oh, we got to sell everything and the bull runs over. It's like, no, it's like you have to have a little bit of a drawdown, and maybe we avoid it in August. Maybe like things are just kind of chill and then we keep going. The election also is this overhang that's going to create some uncertainty. But I think the broader market is ready to go higher for the rest of the year because companies will put up the earnings to show that. And one thing I want to remind to say, in 2021, there was a legit bubble because companies were putting up stupid earnings and they were getting rewarded for it. NFTs were being sold for $15 million and people were actually buying them. That's not happening right now. Now, there is definitely a bubble in the AI startup landscape. I talked about this on the market close on Friday. I'm seeing some stupid valuations for AI startups. And you can see them as well if you just go to TechCrunch and start reading some of these companies. And I listened to a couple podcasts that are deep in the venture capital space, and those VCs are like, yeah, it's getting a little up there. However, outside of the AI startup bubble, in the public market, if you miss your numbers, you're hit. Shopify got hit this year. Palantir, I thought they had a good Q1. They got hit this year. So companies are getting hit. It's not like companies are just going up to go up because interest rates are high, which means I think the market will respect a healthy earnings cycle going into Q2, Q3 if the broader market as well. And so we'll see what happens. Meet Kevin is freaking out. Yes, I listened to Meet Kevin's analysis on the market crash after I got through the 5-minute pitch to buy the course. And I think he's looking at so much data that at this point he's like trying to form his own narrative. He could be right. I don't want to say he's wrong that a recession could happen. But a lot of the indicators he's using, like the SAM rule and some of these unemployment numbers, they're like not even dated ways to analyze. I think he's acting like he's a macroeconomist that can only use certain rules to dictate if the economy will go up or down, or if the stock market will go up and down over the next 6 months. And the only reason I think that is not the best approach is because what has the past 2 years been like? We printed trillions of dollars. The yield curve inverted. We basically skipped a recession. We had a technical recession in 2022, 2 quarters of negative GDP growth, but then we got over it. We had an 80% market crash on most of like the big individual stocks, Palantir, Tesla, et cetera. The S&P collapsed by 30%. And then the Fed raised rates the highest they've done since 1970 or 1980, and the markets have gone up 20%. So I think trying to use these historical precedents to say, okay, the market's going to collapse now, the market should have not gone up or not collapsed in the past 2 years, and look what's happened. So I do think his analysis there might not be correct, but maybe it is. And if it is, then yeah, we're going to see some weakness. I just think at the fundamental level, recession happens when we have massive unemployment. We don't have that yet. Yes, consumers are building up credit card debt. Yes, they're getting more cautious about where they're spending, and that'll affect earnings, I think, going into 2025. But when the Fed cuts rates, that's going to stimulate things again. As long as that doesn't uptick inflation, we are good to fucking go. If we don't uptick inflation and the Fed cuts rates, we have stimulus, and we have stimulus without having the problems of giving people free money, right? That's how monetary policy can work really nicely sometimes. But we've got to quell inflation, and people have to have jobs. If people have jobs, they're going to have money. If they have money, they're going to spend. If they're going to spend, companies are going to do well. And as Lee says right here, productivity is on the way up. Productivity is at the highest level it's been since 2007. That's not looking at historical macro precedents to try to predict a recession. That's just looking at raw data. Hey, we are the most productive as an economy. We saw that with US GDP growth at 2.8%, beat expectations of 2%. That wasn't bad on Wednesday because people are being productive. And if people are being productive, primarily because of AI, earnings should continue to support that as well. Okay, that's it for me. I got to go. Thank you, everybody, for being here. I think we'll do this every Sunday, dude. I'm liking this. 8 to like 8:45-ish macro earnings review, all that good stuff. I would stay longer, but I'm about to be on a podcast at 9 p.m. Finance Junkies, the podcast I used to be on, then it stopped. Now it's kind of back. You guys will see what happens. The link's right there in the chat. We'll explain more once we get there. But yeah, I think every Sunday, this is a good kind of 30, 45-minute recap, getting ready for the rest of the week. And we'll keep doing this. Episode 1, yeah, maybe this is episode 1, but maybe we got to change the title and put episode 1 in the title. So, all right. Thank you, everybody. We'll be back on the market open 8:45 a.m. in the morning and Finance Junkies in about 5 minutes. Thank you, everyone. Have a good one. See you in a bit.